Hey guys, welcome back to the channel. I hope everyone is doing well. So today, ETF Barbie strikes again. This time I want to estimate like the high yield tourist damage. I'm going to show you the theory and the analysis backing it up. So this isn't the first time I had to defend QQQY and like the siblings JEPY and IWMY. They're, it's just ridiculous at this point. So once again, I'm have to step in and defend their honor. Haters can kiss my fat furry behind. And just so you guys know, I do own shares of QQQY. I also own different Defiance and YieldMax products, but I'm going to keep those kind of hush-hush in the future, and I'll show you why. So why are people still hating on QQQY? I still don't know. I had a theory from my last video. You can go check it out when you have the chance. I'm not hating on people, I'm just hating on their ill-informed opinions based on shoddy research. I'm thinking it's maybe because they're young or they don't have professional finance experience. I think analytics and research win the day. I would suggest for most people, like, please don't simp. You're pumping up YouTubers that I don't think they deserve their money and the support. I think it's better for people to support folks like Return on Dividends and Max Convexity. They actually do analysis on these funds on a daily basis, and sometimes even more. And of course, if you're interested in QQQY, there's a really thoughtful video from this channel called Leaning Forward. I really like the way he's very elegant and thoughtful, and it's unbiased, most importantly. So check those out in the links below when you have a chance. Of course, pretty gals will always outrank cranky fat dopey pandas, but any support you can lend me would really make a difference, because I feel like this information isn't getting out there and it's unfair. There's a lot of high yield ETF misinformation. I just want to help counter it. It's getting ridiculous at this point. I think victory has defeated you. Peace has cost you your strength. So, first of all, rest in peace to Mr. Munger again. This is the first video that she made crapping on QQQY, and I'm not going to link any of her stuff, but you guys can feel free to make up your own mind. So this person seems to like these like normal so-called deep dividend ETFs because they're sustainable. But I'm going to warn people that even dividend aristocrats will have problems every once in a while too. So this isn't a problem that's unique to QQQY. Again, I think most people should just, like, once they find out like the quality of the research, I think, bye Felicia, like, people are gonna find out, wait a minute. First of all, like, if you go back to her older videos, she's saying, oh well, QQQY is a new superior high dividend, blah blah blah. And then JEPY, oh, it's another superior high dividend income. And then, but then why did you keep these videos up? I mean, if you hate them that much, or you think they stink, then why are you keeping them up? And then also, if she likes Warren Buffett and Charlie Munger that much, she should know that by now. Berkshire Hathaway uses cash secured puts to buy, stuff like Coca-Cola. So I don't know, guys. I don't know if she gets it, and I'm thinking it's just like she's in it for the YouTube money and any like the affiliate links and all that kind of stuff. So I just compiled some basic video stats. So in the September 26th video for QQQY, she's got about 32,000 views. October 6th, JEPY, she got 39,000 views, which is pretty good. November 20th, QQQY, again, this is the first time she crapped on it. So it's 21,000 views. And then there's January 9th, recently, she's crapping on QQQY again. So far this one has 9,000 views. So it'll probably get more like by the time you view this video. I'm kind of hoping that she's secretly like the new Jim Cramer. So anything that she says, like, you could probably just either ignore or do like the opposite. But here's the problem, because she carries a lot of weight, unfortunately. So she has like 50,000 subscribers, and even if they only buy like 100 shares, that's a lot of money potentially coming in and out. So let's assume like the 21,000 viewers bought and then dumped 100 shares. This is going to create another layer of nuisance for people that are actually trying to save and invest for their future. So first of all, there's always going to be manager risk for any of these ETFs. So I would say that, you still have to keep an eye on Defiance and YieldMax in general, but that applies to any ETF. But now we also have to worry about tourist risk, because, these funds, they gather a lot of attention just because they're high yielding. But we have to now worry about yield dilution and, and price volatility. So it's really annoying. So again, just to recap, so 50,000 subscribers times 100 shares times $17, because that's the rough price of QQQY. So that's, potentially $85 million of buy and sell pressure. But, of course, not all subscribers are going to be into this fund, either in or out. So let's just assume 21,000 viewers times 100 shares. So even if it's just these viewers, that's still 35 million that's potentially coming in and out, which is pretty disruptive. So let's say before September 22nd, because I'm trying to estimate when people potentially got in or out. So before September 22nd, on that date, roughly there were 650k shares of QQQY outstanding, and there's also 12.5 million worth of net assets. And now let's assume, fast forward, when she made that video, so October 6th, there's about 3 million shares outstanding, worth about 56 million in net assets. You'll notice something interesting, because I'm trying to quantify the effect of if people are potentially buying QQQY from her viewers. You'll notice that the share increased by 369%, but the assets only increased 354%, and this is really important because in theory, the rate of increase should be or decrease should be roughly aligned, and right off the bat, you can tell that there's potentially 15% worth of dilution potentially here. Now, again, keep in mind those are just estimates. There's no way for me to know how many people bought, and I don't know if they bought on the same day or maybe some days after. These are just estimates, but there is some plausibility. So you quantify the effect of the dates between September 22nd and October 6th, the difference between 56 million here and 12 over here, that's 44. So it is plausible. I don't know exactly how many went in and out, but it's just something to kind of wrap some numbers around. And then now let's take a look at afterwards. So the rate of increase from 3 million to almost 9.5 million, and then correspondingly the net assets increased to 188 million. So this is roughly around the time when people could have been potentially dumping shares. You'll notice that the shares only increased by 213%, but then the assets, funny enough, increased by 235%. So this is the ideal scenario. You want the rate of net assets to increase, but then the share count to kind of either stay flat or increase at a slower rate. So this is pretty interesting. So this time you have 213% versus 235%. So that's good for, potentially you can inflate the rate of your return about 22%, potentially, of course. So that means tourists left. So there is some good news here. I guess when people they jump in, they realize, oh, maybe this is not what I want, and then they leave. This is potentially good news for people that are in it for the long term. And just to kind of counter some of her bad analytics, the QQQY is based off of the NDX index, and of course, so you have to look at the VXN, which is kind of the VIX for the Nasdaq related stocks. And the VXN direction explains part of the lower yield. It's not because the managers are performing poorly or whatnot. If you look at kind of again, I kind of want to go back to around the dates when she's making her videos. So from September 26th, the close of the VXN was 22.87, and then I guess there was like a nice bump up when she made her first, I guess, crapping of on QQQY. It bumped up to 26.1, and then recently, like the price of the VXN is kind of lowered by 6 to 16.66. So overall, there's a 35% decrease in volatility. So unfortunately, that impacts the return. But that's not, anything that Defiance is doing wrong or anything that Zega Financial is doing wrong. It's just there's just less volatility. So of course, there's less money to go around. And of course, then you have to compound that with like tourists coming in and out. So that's like, it's a big mess. So I guess like just to sum up, that your yield on cost is more important. General total return, that's good to know, just to kind of benchmark the overall performance. But at the end of the day, it's your yield on cost that's important. That's why you want to try to keep your cost bases as low as possible. So when tourists leave a fund, that's your time to kind of shine. Or even better, like if on the rare chance that you get you can buy an ETF at a discount, even better. And yes, there's return of capital, but it's just a partial refund of your original investment. I wish some of my all the crypto and stock losers would return my capital. So there is some good news. Yeah, whenever the tourists leave, you can get good deals potentially, and then when they pile back in, you can dump on them if you want, and then you can rinse and repeat. So I know that sometimes life is not fair, but we can make it unfair in our favor. And it's not our fault. Some of these people, they don't pay attention to people that actually conduct research. So I don't know what to tell you. I guess it's just life. Some people don't actually want money. So now again, I don't want to say that there's no risk in these funds. If you want high yield, you kind of have to expect higher volatility risk potentially. But you can smooth out some of the volatility with diversification and a higher cash allocation when things are kind of going smoothly. And of course, I don't know about your potential, I guess your risk tolerance. If you're scared, there's nothing wrong with hiding out in things like SCHD, money markets and gold buried in your backyard. You kind of have to, make adjustments if you're more of a security investor. So I hope you like this type of content, and please subscribe. Again, right now, I'm not getting paid anything for making this type of content and doing this type of research. So of course I've appreciated all my old and new subscribers alike. I hope everyone makes some good money out there. I hope you guys are able to take advantage of dopey investors out there. And thank you very much, and I'll see you in the next video.